All right. Hello, ladies and gentlemen. Welcome to another Friday. All right. In the last Friday session of 2022. All right. So this is Portfolio Cash Flow live with TT over here. All right. And I'm going to guide you and show you how you can invest in a very simple method. Yeah. Okay. And create a cash flow of $2,000 if this is your goal. All right. In percentage terms, it works out to about 2% a month. All right. Or 24% per annum. All right, now, so this portfolio, which is our model portfolio built for the public, all right, because these sessions that I do on Friday are done for the public and investment general. Yeah, okay, I want to show you that it can be done, all right, that, any investor out there in the retail scene, right, can actually use very simple methodologies and achieve outsized returns regardless of market conditions. All right, now, so we started this portfolio live. Let's see, when did we do this? All right, I do believe that we started this in May. Yes, May 2022. All right, and now we are in the 8th month. All right, and we have not missed a target. All right, so we are 8th month right now, and our portfolio stands at a 19% return. All right, okay, so we are 19% up, right, over 8 months over here. I'm happy with that. I'm not sure about you. All right, now, but however this portfolio is built, right, with an initial capital of $100,000. Yeah, okay. Now, so in order to execute, the strategies that I cover over here, which is actually very simple, right, it does require a sizable account. All right, now, but if you have only a small amount of capital to start, right, do consider coming and joining into any of our mentorship programs, right, where I teach my current students how to do the same and build the same portfolio, which is actually risk neutral, right, with a small capital, even as small as just $2,000. All right, now, how is this doing? All right, we had our first intake over here about a month ago, all right, starting at the end of November, all right, and all our students right now are on course, right, to build a portfolio to return them 30%, all right, over the course of the next 12 months. All right, how about that? All right, so be it $2,000, be it $100,000, there is a way for you to earn these kind of cash flows and outsized returns. All right, now, so without further ado, let me get my session started and running, all right, because it is the last trading day of the year. All right, it's the last trading day of the year, so I don't want to hold you back for too long as well. All right, so now, ladies and gentlemen, let me get through my drill over here. All right, hello, Susan. Hello, Mei Ling. All right, and the rest of you, if you're joining me once again, all right, do leave a comment. All right, and if you're new with us, all right, please note the banner on the screen right now. If you're joining us for the first time, all right, please click on the link, all right, or go to this link that you see on the banner, streamyard.com/Facebook. You'll be brought to a pop-up page, all right, and on that page, you'll see a Facebook banner over there. Just click on it, all right, and it will approve your profile, all right, for us to view on the backend software. All right, so this allows me to see who's leaving comments, right, during the session, right, as questions are posted. All right, so please do so, all right, because the drill that I have over here is something very simple. All right, if you leave a question for me, all right, but you come out as an anonymous or Facebook user, all right, I will not address the question. All right, okay, so it just takes a little bit of effort over here. All right, go to the website, approve your profile, so I know who I'm addressing to. All right, which makes it more personalized as well. All right, and we can get this session done, all right, in a very, very fruitful and learning manner. Okay, all right, now, so I'll make sure I take that away before, I get myself blasted by the rest of you again. All right, and the next thing I need to cover over here is pretty much a disclaimer. All right, okay, now, so the disclaimer over here is pretty much that all forms of trading bears a risk of loss. So I need to inform you that I'll be doing trades on my own personal accounts, right? And by no means these are any form of recommendations. I'm just sharing it, right, from an educational perspective, telling you how I think, what I do, right, and why do I make these trades for your learning benefits. Yeah, all right. So if you're gonna do, follow any of these trades, please be aware of all the risk involved before deciding to do so in your own live accounts. Okay. All right, now, so that is out of the way. All right, so if you're joining me tonight, all right, do leave a comment, say hello. All right, so I can address you, yeah? Okay, now, so the numbers are much lower today, all right, is normal because it's the last Friday of the year, all right, and many people are probably out there trying to celebrate themselves. All right, now, so, but I'll run my course over here and I will cover what I've promised, all right? So one thing that I want to do, and I always start with, all right, is my market outlook. All right, so I'm going to bring about the SPY. All right, now the SPY, no, this is the SPX. Let me bring out the SPY. Now, the SPY is pretty much the ETF share version, right, of the entire index. All right, now, so is it different from the index? Not really. but it succumbs to a little bit of what we call the supply demand, because a share can be traded. All right, so there may be more supply than demand, so there's a slight discrepancy according to the index. Yeah, but it's negligible. All right, now, and what do we see over here? All right, as all you can see now, all right, we are pretty much fallen back down. All right, and we are pretty much inside this trading range now. So the trading range of 3,850 to a low of 3,600. So we are once again in a 250 point trading range, all right, when it comes to the index. All right, and this market tried to break the roof, all right, of this resistance. It failed, and now it's back down. All right, and what we have right now is a trend that is sideways. All right, now, so we're coming close to the end of the year, and there's something, in fact, the last day of the year, all right, and there's something you need to pay attention to. All right, okay, this is also what we call the portfolio dressing period. All right, and this year, right, portfolio dressing isn't going to be pretty. There are no pretty costumes out there. All right, now, so why do I say this? Simple. Because if we take this is a 1 day. All right, if we take a 1 year, there we go. All right, if we take a 1 year outlook, ladies and gentlemen, all right, the SPY started at 4,800 points, and we are 1,000 point lower. All right, so the market is down close to 20% this year. Can you imagine what it has done to many of the portfolios out there for fund managers? This is a year where many of them are going to report negative returns. All right, it's not only going to be this year. All right, it's probably going to be the next few years ahead of us. All right, if you have joined me before, you have heard me talk about the lost decade. All right, so professionals out there are anticipating, all right, a lost decade of low to negative returns. All right, and this is but the first year. Now, if you think that next year is going to be good because we had a negative year, think very hard again. Why? Because we had a bullish market for 12 years in a row. All right, okay, it's going to take time for it to be undone and unwound. All right, okay, now, so if you believe that, the mainstream media says that the Fed is going to pivot next year, think again. All right, because our inflation rate is still way too far, all right, from the target point. All right, so what I see, I'm going to share with you in a while. All right, and these are the dangers in the markets that you need to pay attention to, all right, going into the new year. All right, and this will help save your portfolio. Okay, all right, now, so in terms of what I see in the markets right now, all right, I pretty much see, all right, that, all right, we're going to hold this position today. All right, we're not going to see any drastic sell-off. All right, the fund managers are going to defend as much as they can today. All right, and we may even see the market turn flat or a little bit positive, all right, to close the year. All right, and then come 1st of January, all right, or the next market trading day, all hell breaks loose, ladies and gentlemen. All right, now, so why do I say all hell breaks loose? Because to defend this market, fund managers have to load their portfolio with pretty looking stocks. Many of you may not understand this concept, right? But it's pretty much going down, all right, to our basic nature of survival, all right, now. So what do I mean by basic nature of survival? Look, all these fund managers are going to face angry customers this year. Angry customers that are going to question their portfolio. So how do you think they're going to show their clients what stocks do they own? Can you see where I'm going? All right. Do you ever think, all right, that they're going to show their clients that they bought into something like that, Intel? No, they can't. Why? Because with their portfolio negative, and if the fund managers show that, hey, they bought a stock that was negative all year and going down the entire year, they're going to get fired. All right, they're going to take their money somewhere else and then move it. All right, and that's not what fund managers want. All right, because they want to keep the money inside their funds. All right, so how do they navigate this? All right, they're going to load their portfolio with pretty looking charts. Yes. All right. Okay. If you think I'm wrong, right, think very hard. Right, because they're going to load their portfolio with charts that look like this. Right, so yes, they're going to show their clients that they're going to. So I'm sorry, I lost money this year on your portfolio, but look at the stocks that I'm owning. Right, can you imagine if we own these kind of stocks, all right, and we are still negative, all right, okay, it's already a good result, and that's how they justify, all right, the underperformance, all right, and this is what we call portfolio dressing. All right, okay, because they're trying to load stocks that minimizes difficult questions from their customers. So if their customers start seeing stocks like this or stocks like this, can you see that? Or stocks like this, right, inside their portfolio, right, and then they see that the portfolio is losing money, right? Many of them who do not know about the stock market, right, will tend to say, oh, it actually looks okay, all right, maybe I'll just stay with you, all right, and help me recover my money. That's it. Yeah, all right. Okay, now that's why, all right, many of you who are here to join me right now, I want to show you ways, all right, in which you can get out of this wicked cycle, right? Learn how to invest your own money, learn how to take control of your own money, right? Be it whether you join me on Friday every week, or be investing in yourself to come into one of my mentorship sessions. All right, trust me, you will benefit. All right, okay, because I'm walking the talk. I'm showing you live trades over here. All right, can you imagine the trades that I take, right, together with all the students who come under my wing? All right, because we trade live every single week together. Yeah, all right. Now, so going ahead, let me get back to my focus. All right, I don't really see the market going anywhere today. All right, but come next year, all right, I expect the market to start the year negatively. All right, now why do I expect the market to start the year negatively? Because all these pretty looking charts are going to be sold. All right, the fund managers bought all these stocks to hold them until the 31st of December. All right, so they can put them inside their report of their portfolio holdings. But once the market opens next year, right, don't you think that they think like us again? They have one entire year, right, to clock their performance. Do you think they want to hold stocks? They have been overbought. All right, now why do I say that? Because this stock is a boring company, it's a utility company. All right, and a utility company, all right, that now trades at a PE ratio of 20%. Have you ever seen any utility company grow their earnings at 20% per annum? If you haven't, this stock is overvalued. Right? Or, right, let's talk about one of the giants, Coca-Cola. Have you ever seen Coca-Cola grow more than 5% per annum? No, but Coca-Cola trades at 27 PE. That's 27% on their earnings, all right, that's expected on the growth. And that's not all, because if you look at P&G, P&G trades at 26% earnings. Do you think P&G is going to grow their earnings by 26% every single year? If you don't, then this is expensive, right? And when they start selling these kind of defensive heavyweight consumer staples or utilities, right, what do you think the market is going to do? It's going to be dragged down. Yeah, right. It's going to be dragged down very, very heavily. So this is what I want to tell you before the year ends. If you hold, right, if you hold any stocks right now, right, they are boring, they are stable, right, and they are all trading at their highs right now, right, you need to start thinking about profit taking. All right, okay, you need to start thinking about profit taking, because come next year, the fund managers are not going to hold any of these stocks anymore, right? And when you think about them selling, how much there is that they're going to sell, all right, where do you think these prices are going to go? Yeah, all right, now, so be it buy a put option as protection, be it whether you cash out 50% of your holdings, take your profits, do something, all right? Don't just sit there, all right, okay? Because if you lose these profits, don't come crying. Yeah, all right, that's why I anticipate, that's why I see, right? But in reflection, all right, okay, come next year, what the fund managers are going to do is they're going to start loading on value. All right, trust me, next year is going to be a value play because growth is gone. Right, with high interest rate environments, nobody's interested in buying growth stocks anymore. Right, the reason why growth stock has done well during the pandemic is because interest rates were low. Right, money was cheap. Right, these companies were flush with money to try to grow. Right, and they sell pretty stories, which many of them are now unwinding and unfolding. Right, many of them turn out as frauds. Right, this is part and parcel of the game. Right, when you try to get greedy, right, I always tell people this: every dog has his day. Yeah, all right. All the growth investors are now gone. All right. Now, why do I say gone? Because I'm probably one of the hardest, right? Okay, trainers or mentors out there, right, on a stock like this. Right? I've been wrong forever. Right? I've been wrong throughout the whole pandemic. Right? But look, when I get it right, all right, okay, it kills everyone. Right? It kills everyone. Are you still holding the stock? All right, because my question is, why are you holding this stock? Right? Yes, right. You hold it when it's growing, right? But now Tesla is no longer the same Tesla. Why do I say that? Because they have grown, right, as big as they can in terms of their market share. Right? Competitors are now coming in, right? And Tesla isn't an expensive made car, right? It sells on its brand, but it doesn't sell on luxury, right? But yet the pricing of this vehicle, right, is much higher than many of their competitors. All right. So do you think people are going to stay with this, or do you think people are going to find cheaper options when it comes to going green? Yeah, all right. Now, so that's my take over here. And of course, with Elon Musk and all his, Twitter and all his, actions right now, isn't helping the stock, isn't helping the company. All right. Am I against the stock? No. I'm just against the valuation. I've been harping on the valuation over and over and over again. All right. Okay. And now it's just coming back. All right. Of course, it's not just this. All right. Why? Because Amazon is doing the same thing. Look at Amazon. It fell from $146 down to what? 82. That's almost a 50% haircut. All right. Yes, the stock split. All right. I can't remember how many times the stock split. I believe 10 for 1. There we go, 20 for 1. All right, so the stock split 20 for 1, but you can't hide the fact that it fell by 50%. And that's the risk that you take, right, when you do decide to trade, right, and speculate in growth stocks. If you want to get in, make sure you get out early. Because if you get late to the party and you get out late as well, you're wiped out, right? You're wiped out. Yeah, right. As much as I want to say that, you're wiped out, right? Because the same thing happened to cryptocurrencies. All right, okay. Every investment, for it to be stable, for it to be safe, right, relies on fundamentals. All right, it has to feel, it has to see, it has to touch. You have to, you have to understand the numbers. All right, when you can't understand the numbers, right, you are just trading on hype. All right, and when you trade on hype, it always makes sense to get out early. All right, always makes sense to get out early. Yeah, all right, now, so that's my take over here. All right, now, so having said all that, all right, let's get back to our portfolio. All right, so that sets the tone over here. So next year, I expect the Fed, right, to raise interest rate maybe just 1 or 2 more times and then hold it there. All right, trust me, they're not going to print money at all. All right, and trust me, they're not going to start lowering interest rates. All right, they're just going to raise it maybe once or twice and then hold it. All right, hold it so that the economy can start slowing down and bring down that inflation number. Yeah, okay. So with interest rates numbers at 4 to 5%, right, it's still going to hamper a lot of growth. All right. Okay. So now, all right, going into 2023, I believe, all right, fundamental investing is key. All right, value investing is key. Right, you need to find deeply undervalued stocks if you want to buy. All right, and in fact, next year is not a time to buy and hold. Next year is a time to buy and trade. All right, buy and trade because volatility is going to still stay high. You're going to have markets swinging high and then coming back down, swinging high again and then coming back down. It's just going to be how it's going to be. Yeah, all right. Now, so if you buy stocks when they're cheap, when they ever catch a good bounce, 10, 20%, get out of it, wait for it to come down again. So that's my expectations for next year. All right, now, so going into our portfolio, let's have a look right now. All right, so we closed out December with $2,300 in cash flow. I can't complain. We still hit our targets. But now it's time to focus on month number 9. All right, so we're going to January 2023 expiry, and now we're only sitting at $1,446. So I need to work. All right, I need to put money to work right now. So the first thing I'm going to do is let's go now. All right, and let's look at WBA. All right, now, so we own WBA stocks at $45 a piece. All right, let's see if I can add any cash flow into this position. Okay. All right, now, so let me bring up my trading platform. Okay, now, so WBA has gone up to 42 and then now it's coming back down. All right, so since the trend is down, I don't want to be selling any call options right now because once going to the new year, it jumps again. All right, I may get my stock taken away from me. So that's not a good idea. All right, now let's go to Intel as well. All right, same thing with Intel. It's on its way down. I don't want to be selling any call options right here, right now. Okay, now, so these two positions are out. Let's go to VZ. Right now, Verizon is a different story. Verizon has been going up against the market right now. All right, okay, so I like this. So I'm going to try to take advantage of this and see if I can capture some cash flow. All right, now, so I'm going to make use of this support resistance level, and that's about what, 41? All right, so let's see if we can get anything at 41 for a call option. So let's go to January expiry. All right, $41 call. All right, will get us about 17 cents. All right, so I've got how many shares? I've got 300 shares. Let's see if I can get it. All right, let's see if I can get 17 cents or $17, all right, in terms of cash flow multiplied by 3 folds. All right, it's done. There we go. All right, I just sold $41 call options. I sold 3 of them, right, at 17 cents. All right, now, so for those of you who are new with us, right, the key is we sold portfolio puts on this stock, right, and then we will assign the stock. So now I'm actually holding the stock and collecting dividends every time it's paid, all right, and hoping for the stock to recover back above $50. All right, now, so it's a buy and hold technique over here, right, because I was assigned the stock, right, but in the meantime, all right, when I can, all right, I will be selling, call options, all right, in a sense of a covered call, all right, okay, turning the position into a covered call, all right, and collecting more cash flow while I wait for recovery. All right, so now I'm selling a 21st January, right, call option for 41 strike, right, and this is done today on the 30th of December, all right, and 0.17. Okay, now, so this is going to pay me $51 in cash flow, right, and that bumps us up to almost $1,500, right? I can't complain. Not a lot, but I can't complain. Let's go to our next one, TSN. There we go. So TSN, like the Intel and WBA, has been going down, so I don't want to sell any calls right now. All right, HBI, right, it's been bouncing up, right, and I'm holding on. Yeah, right now. So that's it. All right, that wraps up our stock holding positions. All right, the rest of them are all portfolio put options. All right, so those of you who are new with us, we sell portfolio put options, and you may be asking, Terence, how is this different from selling a naked put? Execution wise, it looks the same. All right, the difference is how we allocate the capital. All right, now, so cash secure puts are allocated with 100% cash to pick up the stocks. I don't do that. I don't do that because it's not needed with the kind of stocks I trade. All right, so I call what I call take on a little bit of leverage, that won't kill me, but allows me to grow my portfolio at a much better return. Yeah, okay, so I allocate 70% of the cost of owning these shares. All right, okay, when I have a portfolio put position. All right, so how does it change? It changes, right, once I'm assigned the stock. All right, so when I have a portfolio put position, I set aside 70%. All right, but once it becomes an assigned stock, I will allocate 100% into holding that position. All right, so as you see over here, all my stock holdings, right, are calculated based on, right, 100%. Right, how much it costs me to own those stocks. Right, but my portfolio put options, right, are at 0.7, which is 70%. Yeah, okay. All right, so that's how I calculate my use of capital over here. All right, now, so Micron, I'm just holding it. No action is done. All right, okay. Now, SWKS, Skyworks, no action as well. All right, so most of these January positions, it's 20th of January. So for most of my January positions, currently, I'm holding them. I'm not touching them at all. Yeah, okay. All right, now, but what I'm doing today is I'm actually going to add. All right, I'm going to add. All right, why? Because I said earlier, I do believe that once we cross over the new year, all right, severely undervalued stocks will get a bounce, will catch a bounce. All right, and I want to take on some of these positions, right, before the turn of the year. All right, so the first one I want to load up, all right, is a retail stock, ladies and gentlemen. All right, I'm going to load up another retail stock into our portfolio. All right, so retail stocks have been bettered, all right, over the last couple of days, and this time I'm going to add another, conglomerate, Nordstrom. All right, okay, Nordstrom. If you look at Nordstrom over here, it's been beaten, right, to a low, all right, of $15. All right, so that's going to be my put option strike that I'm looking at. All right, but first let me explain. Nordstrom is now trading at 8 PE ratio. All right, and that is cheap. Second, it offers a 4.7 dividend return, and that is high. All right, okay, now let's go and look at the fundamentals over here. All right, the company now trades at a current 8 PE ratio versus a 31 PE ratio on an average for 5 years. All right, now, so am I really going to buy and hold this stock? No, I'm trading it because it's severely undervalued, right? It's beaten until like a pulp by the market over here, right? Which is severely done for a company that's still delivering profits, as you see over here. All right, so I'm catching that bounce. All right, okay, so as I said earlier, 15 is my strike over here. So let's see what we can capture for 15. All right, we can capture about what, 43, 44. So let's go ahead and do that. And it's a relatively cheap stock, so it doesn't take up a lot of capital. All right, now, so 15, so I'm going to capture 5. I'm going to sell 5 of them today for this portfolio. All right, so let's try 43. They don't want to take me at 43. Looks like somebody else got taken at 43 because the last done changed, but not me, not my order. So as all of you can witness live over here, I don't have any preferential. Yeah, okay, all right. Now, so it's just due to the brokerage platform. All right, okay, different platforms fill at different prices. That's okay with me. Okay, I got mine filled at 41. So I'll just let you verify and see it over here. All right, so I just filled over here, Nordstrom January, $15 put options. I sold 5, right, at 41 cents, okay, at 41 cents. So let's record this down, right, and let's see how it changes our cash flow. So trade number position 54, so that it won't die on us. JWN, 20th of January, $15 put option, done today on the 30th of December. All right, 41 cents. So this puts another 205, and we're now at 1,007. We're inching closer, ladies and gentlemen. All right, we're inching closer, and I'm not done. I'm not done. Today I want to add one more position down, and this position is going to surprise you, ladies and gentlemen. All right, okay, because today I'm going tech. Yes, I'm going tech. All right, because I've decided that, hey, this stock has been whacked, all right, to, unprecedented level. All right, the valuations are just too crazy right now. All right, I want to play it, all right, for profit and a bounce. Yeah, okay, now, so the stock that I want to add back, I've done it before, all right, and I'm coming back. All right, so the stock that I want to trade today, ladies and gentlemen, technology, Meta. I'm back for Meta. All right, okay, now, so Meta has hit a low of $88 and then it's captured a bounce. All right, so now I'm going to trade Meta over here. All right, at this support level. Let's change my drawings. Let's do a price level. All right, so this price level is about 112. Let's see what we can go and get to, okay? Now, so I'm looking at, well, I don't have to be too greedy. Let's go with 105. Yeah. All right. Okay. So as you saw over here, our support level is 112. I think 105 is pretty decent. All right. So I'm going to sell 105 on Meta for January. I'm just going to take 2 of them. Yeah. Because it's a relatively expensive stock. So I'm just going to take 2. On Meta, 105. All right, I just hit it in the market. I don't want to negotiate at all. All right, so I sold 2 of them. All right, Meta over here, I sold 2 contracts of portfolio puts at 114. All right, at 114. So let's go record it down. Trade number 55, 2 options. Meta. All right, 105, 114, 228. And guess what? We're 1,930. I don't need to fight too hard anymore. I'm already there. I'm not going to nitpick on $70. I'm not going to put on more risk just for the sake of hitting that $70 target. All right, I'm pretty sure I'll be able to sell some, call options over here on these stocks and get that $70. We have another 3 more weeks. All right, so I don't want to push myself too hard today. All right, so as of now, my portfolio is utilizing $157,000. All right, okay, and that means I'm 130% leverage. All right, now, so what do I mean when I say I'm 130% leverage? Right now, our portfolio has grown from $100,000 to $118,600. All right, okay, but my total requirement, right, if I'm assigned on these shares, all right, okay, or if I'm yes, all right, my total requirement right now is about 157,000. All right, okay, so I'm about 30% over my capital that I have inside the account. Yeah, all right, but that's fine. That's fine. I'm not severely leveraged. All right, so we have run this portfolio for 8 months. All right, and no matter how dire the market conditions is, right? All of you who have come back every single week, right, have witnessed this for yourself, right? Okay, we have never ever gotten every single one of our stock assigned on us, right? And even if I did, my portfolio is fine. Let me show you why, right? Because my portfolio right now, right, has $118,000, right? But if these were holding on to stocks, right, all US brokerages offer margins when it comes to holding stocks, right? And that means my account, right, actually has $237,000 when it comes to buying and owning stocks, right? And if you look at it right now, right, I will require round about what? Around about 157,000, 170,000, right? My portfolio is able to hold up to about 235. So I won't face any problems at all, right? And second, right? The important point you must not miss out is that when I get into any of these trades, most of these stocks are at prices that are severely beaten down. So do I expect them to go down further? Yes, a little bit, maybe another 5 or 10%. But I don't expect them to get whacked by another 50% on the downside. So that's why I don't have to worry, all right, about running into a foul, all right, of running out of cash. All right. So of course, this takes experience, right, of knowing what you're doing and knowing the stocks that you're tackling with, right, to be able to run it this way. Right. And definitely that's something that we cover and teach in more content and detail when it comes to any of our mentorship programs. But over here, right, I'm just showing you the stocks that I look into and that I trade. All right, now, so these are the two portfolio stocks that I'm going to add to the portfolio today. All right, and we're close enough, 1,930. I think that's a good start for 2023 over here. All right, I'm happy with that. So before I end the session off, I'm happy to take one or two questions. All right, so if any of you are joining me right now, if you have questions for me, all right, drop them in the comments, okay? All right, drop them in the comments right now. Wow, that was fast for a question. I see a question from Susan. All right, hang on. Okay, all right. Now, Susan, what do I think about GSK? I don't think it's bad. But a lot of pharmaceutical stocks have enjoyed that defensive move. So a lot of them ran up. So my fear is just an industry fear, right? My fear is that, come January, a lot of these top performing stocks at the end of the year will be sold off. So if they sell all pharmaceutical stocks, GSK has some room to fall. So I rather pick up GSK after a fall. Yeah. All right. After a fall, right, in their like Merck and Pfizer. All right. When I see Merck, Pfizer fall, right, then you spark a bigger interest in GSK. Yeah. Okay. Does it make sense, Susan? Yeah. All right. So I'm just linking up industry as well, right? Because market isn't exactly too safe. So I try to cover all angles as much as I can. All right. Before I make a trade. Anthony. All right, if I take an assigned stock with the current market value, your portfolio should be much lower than this. That's an interesting question. All right, so Anthony, maybe just let me show you how I get my $118,000, okay? All right, now, so Anthony, all right, my $118,000 is pretty much my initial capital, all right, and then all I did after that was added every single month's cash flow that we have locked in so far. Right, every single month that we went by. Yeah. All right. So that's all I did over here. Yeah. Okay. Now, so give or take. All right. Give or take. I'm just choosing to recognize it earlier. All right. Okay. Recognizing it earlier because most of these trades are closed, right? Except for probably these two. All right. Because these two trades only expire in January. So I'm taking half of it. All right. Because it was 2 months trade. So we recognize half of it. All right. And then the other half in this coming month. All right. So we're close enough to the amount itself. All right, so I won't nitpick, all right, Anthony? Yeah, all right. So I hope you will be able to see the understanding over there. Welcome, Susan. Okay, all right. So it seems like I picked up the 2 questions as well for tonight's session. All right, and let's put this to a wrap, ladies and gentlemen. I hope you enjoyed tonight's session as well. But before you leave, it is the last live session for 2022. All right, so can you do me a favor? Just hit out, all right, all those likes as best as you can, okay? All right, hit out all those like buttons, all right? Okay, help this video get shared out, right? Because I did share my views on the markets going to 2023, right, I do want it to reach out to as many people as possible so they can save their portfolio, save them from some losses on their profits or even some big losses, right? Because they didn't get the information, they didn't sell on stocks. Yeah, okay. All right, so help me hit the like button over here, and if you can as well, hit the share button, share it out, right? Because if you have friends who are investing in the markets, this will be very useful information, right? They can take, right, and defend their portfolio in 2023. Okay, now for the rest of you, all right, thank you very much for joining me once again in this Facebook live session. All right, okay, I hope you've traded well this year, all right, or all right, start 2023 looking forward. Okay, all right, now so I hope to create more portfolio returns for all my students who are joining me in this session. All right, we'll continue to work hard together. All right, we had a great year. All right, next year is going to be another one for us. All right, thank you very much, and ladies and gentlemen, I'll see all of you. All right. 2023. See you next year. Okay, bye-bye for now, everybody. Good night. Thank you.